All right, welcome back everybody to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin. In today's video, I want to talk about how to retire off of cryptocurrency, focusing more on blue chip altcoins that are more longer term hodls. Now, keep in mind, nobody can see the future. I am not a registered financial advisor. These are just my opinions. But having said that, check the timestamps down below in the video description, and let's jump in. While we are going to start with Bitcoin, also talk about Binance and Chainlink, any savvy investor, whether they're involved in cryptocurrency or not, will tell you that the key to building wealth is earning passive interest, making money while you sleep, and earning interest that compounds off of itself. That's the key. Ethereum and staking it in the ETH 2.0 contract address is going to be a big part of this. And although expected ROI is subject to change, we can calculate expected return from staking Ether in the Ethereum 2.0 deposit contract. We will get to ETH, like I said, check the timestamps, but let's start with a coin that is quickly being added to almost every portfolio, Bitcoin. In this recent Salt Talk that just premiered 3 hours ago, notable investor Cathie of ARK Invest shares why Bitcoin is her #1 long-term hodl. And listen to the analogy she makes with the Bitcoin protocol, comparing it to the internet protocol. Watch this. Let me know what you think.
So Bitcoin, do you think, or what's your sort of vision for Bitcoin? Is it going to become a reserve currency? Is it scarcity value like real estate? It started the purview of every college student, including my own, knew about Bitcoin before their parents did. So what's your kind of vision going at 5 years and 10 years for Bitcoin as an asset class and a value?
We don't have to go out 5 or 10 years. It's here. We believe, we wrote a white paper in 2016 called Bitcoin Ringing the Bell for a New Asset Class. And so, yes, we believe it's here. We believe that Bitcoin is the reserve currency of the crypto asset ecosystem. We also believe that there will be very few huge winners in the crypto space. We think the cryptocurrencies are going to be the huge winners. So this is really flipping the internet on its head in terms of how it evolved. And the internet evolved without a payments infrastructure. And the reason for that is nobody thought commerce would evolve on it. This was for intelligence and academia, and consumers in the United States weren't even allowed to use the internet legally until 1991, Telecommunications Act. We believe that the Bitcoin is, and crypto world, the value accrual, where we will see most of the value accrue, is to the cryptocurrencies themselves. This is not what happened in the internet. In the internet, the protocols, so Bitcoin's blockchain is one protocol, Ethereum another, the protocols basically just became standards, right? Technology standards upon which these very valuable applications were built, Facebook, Amazon, and so forth. The value accrued to the applications. This time, we think the value will accrue to the protocols themselves and the currencies as measured by their currencies. We believe that Bitcoin is already the reserve currency of the crypto asset ecosystem. And we can see that in that many crypto assets, most I would say, are priced in terms of Bitcoin. So that's the unit of account. The currencies are very important. We think there will be maybe 4 or 5 that are going to accrue the most value.
Okay, great perspective. Give me your thoughts down below in the comment section. While there is a time to focus on hot, cheap alts for quicker gains, when you're thinking about retirement, it's all about those longer term hodls. And notice that Cathie said that she believes Bitcoin will make it in the end, along with maybe 4 to 5 other top protocols. And while Bitcoin is going after the store of value / money market, Ethereum is going after a separate market altogether. It's aiming to be a global supercomputer, disrupt the Amazons, the Amazon Web Services. And with the full implementation of ETH 2.0 still multiple years away, let's calculate how much passive interest you could earn per year based on how much ETH you stake. Now, the minimum is 32 ETH to stake and to be able to run a full validator. We made a video back in 2019 when one Ethereum equaled just a few $100s. Back in November 3rd, 2019, how much Ethereum should you own? And we talked about this, that 32 Ethereum is the key. Now, you can do it with less than 32 Ethereum. You will be able to add a smaller stake to a staking pool. Some companies can do it all on your behalf, so you won't even have to worry about staying online. Companies are doing this, but also crypto exchanges are doing this as well. They all want you to keep your ETH on their exchange. Binance is offering this, allowing its users to deposit even the smallest amount of Ethereum, promising a return of between 5 to 20% per year. Huobi offering something similar, while the minimum for Huobi is 0.1 Ethereum. It promises a slightly higher return than Binance, starting at 6% per year up to 20%. OKX, something similar. Kraken, something similar. And even number one United States exchange Coinbase offering something similar, showing that Ethereum, blue chip altcoin, has major support from juggernauts of the space. Now, how much ROI you should expect is still unknown. It totally depends on how many people choose to stake. Let's just say that you do have 32 Ethereum, that you did see our video back in 2019, and you load it up just in case. Assuming that the annual interest on your stake will be around 7.69%, which to me seems very reasonable, and staking 32 Ethereum today, in 5 years, that would earn you a total of 44 Ethereum, and in 10 years, earn you a total of around 56 Ethereum for staking, for doing nothing. That's pretty cool. And you also got to think about how valuable will 1 Ethereum be in 10 years when you have 56. Now, I will link this calculator down below. You could do this all day. You can put in different settings for you to get the most accurate results for you. Staking 100 Ethereum would get you 138 in 5 years, 176 Ethereum in 10 years. Definitely an easy way to support the network and make some money. Now, I do want to talk about some of the other top blue chip altcoins. But first, let's talk about the ultimate tax-free retirement vehicle, cryptocurrency IRAs. Basically, if you want to buy, sell, or trade cryptocurrency tax-free, I want to take 60 seconds and give you a recommendation. I like iTrustCapital. They are a partner of the channel, but I also personally use them. So you can trade 24/7. There's no hidden fees. Everything is very transparent. And the thing I like is they have institutional custody, they are insured, they're backed, so your digital assets are secured. I will link my full video breakdown on how to realize gains and trade tax-free, linked down below. And be sure to use the promo code altcoin in all caps or click the link down below to get your first month free. Like I said, I use them, and they just added Polkadot as well as Chainlink with Cardano soon to come, along with a vast array of the top cryptos. Check it out, link down below. Okay, let's keep moving. Next blue chip altcoin making news, Binance and the Binance Exchange. Starting today, you can trade Tesla, the stock, as a tradable stock token on Binance. Binance announces the official launch of its zero commission tradable stock tokens, allowing the users to trade fractional stocks. Now, I don't think it's a coincidence that the week Coinbase stock is going public on NASDAQ here in the US. Binance is launching their own tokenized stocks on their exchange. Users will be able to purchase as little as 1/100th of a Tesla share, with the prices settled in Binance stablecoin BUSD. This Binance product is backed by a depository portfolio of underlying securities managed by an investment firm in Germany. Interesting, because Binance isn't even headquartered in Germany. Give me your thoughts down below. Next up, big news for altcoin Saffron and altcoin Chainlink. Saffron integrates Chainlink to settle and manage tranches. And just as a reminder, Saffron Finance is a DeFi altcoin that actually lets liquidity providers customize how much risk they want to give themselves. Our Web3 app, Saffron Finance, is a decentralized application that allows liquidity providers to get various degrees of exposure depending on their risk-reward appetite. So it's very similar to the compounds, to the Aves, only you can manage your risk-reward a little better. Well, they have partnered with Chainlink to access secure and reliable on-chain reference prices used to settle and manage liquidity for their various tranches on Saffron. We selected Chainlink because of its position as a time-tested and battle-hardened Oracle solution backed by high-quality data and wide market coverage. Give me your thoughts down below. That is the video. Like always, see you tomorrow.